Hello and welcome to the Hamilton Financials, my new outlet for nightly productivity in giving tutorials so that my followers, friends, visitors of Hamilton Financials, congratulations to us, we had over 30,000 page views today, can learn from some of our teachings. So today we'll be using the finviz.com screening software. It's the best free screening software. Some people use Google Finance, some people use other outlets, but the outlets that I use are finviz.com and marketwatch.com. Marketwatch.com will show you the best graphs, and Finviz has great screeners. So what we're going to teach you today is we're going to teach you how to screen for stocks if you want to short stocks. Now, when you short a stock, typically when I short a stock, I buy it to cover, and then since I've monitored the stock, I buy to hold. Now, what would you do if you were looking for a stock that you wanted to short to cover to buy? Now, when I say short to cover to buy, it means you short a stock, you hedge or bet that the stock is going to go down, you cover your hedge or your bet, which is that the stock was going to go down, and then you bet that the stock's going to go up. And since you've monitored the stock, you actually may know and earn some aggregate income from your investment. So when you go to market cap, it says any. You're in the descriptive category. So you want to go to market cap small, over 300 million. If it's a nano stock, which is a nano stock is 50 to 300 million, and a micro stock is under 50 million. You're going to want to go small because that's going to give you the highest level of availability of the market cap of the stock, or the market cap of the equities, or the market cap of the stocks or indexes. So you have a small, over $30 million market cap. You want to go into fundamental. You want to see a stock. Well, you don't necessarily need to see your PE, but what you do want to see is you might want to see a return on investment. See, that could be critical. So let's say you have a over 5%. Typically, if you have an over 10% return on investment, well, speaking within dividends, you won't see a 10% or above dividend. That was that investor. I don't remember his name, and he's become irrelevant. But essentially, he was offering 10% dividends and 10% returns. So let's just go with the 5% return on investment, and then you go into the technical aspect. And you want to buy a stock that you think is going to go down. Now, you might say, okay, Ted, what are you going to do with a stock that... Now, what I'm going to do is I'm going to screen for stocks up 15% or more on the day. Now, why would I do that? Well, let's just go 10% or more, because that didn't give me enough stocks. I don't know every stock in the NASDAQ. So let's go with 10%, and let's find a stock that I know. Okay, World Wrestling Entertainment. This is actually a stock that I played with today. You're going to look at World Wrestling Entertainment and say, okay, it's up over 10%. As you can see here, it's up 13.52% on the day. And you think, well, this could be a good investment. This stock could be a very good investment. But you'll notice that within trends, within investing and investing, investments seemingly go up and go down. It's a matter of trends. You could see stocks that stagnate, but you could also see stocks that have, let's say your change was on the month, let's say your change was it's not showing me a monthly change, but let's just go with an over 10% monthly change and look at World Wrestling Entertainment. Now this stock is clearly a television sector stock. Now when you look at look at this. Okay, so what can you tell by this graph? Now you can see that World Wrestling Entertainment went up quite sharply, but you can also see that the increase was not completely vertical. Now if an increase is completely vertical, you can see a slight right horizontal shift to this line, which is trending upwards, leaving it at $8.90. What does that tell you? Well, if a stock were to go up completely vertically, that means that investor speculation or patent allocation or investment within the company created a vertical investment. Now, if this was completely vertical, you might say, okay, well, this stock isn't going to hold its ground. But to do some more research, we'll look at the monthly, and we'll see kind of where the trending graph of this stock is. I typically don't look at advanced. I typically look at line graphs because they give you more information per se. Head and shoulders, many different types of technical analysis can be used. But you must also incorporate your fundamental analysis and your top-down approach. Now look at this monthly graph. It's showing its graph from 2005 to 2008. Well, we know that at the market cap of about halfway through here, between 2007 and 2008, we were at about 14,000 points. And today, on May 3rd, we're at about maybe 13,250. According to the Dow, which is not necessarily the greatest indication of the condition of the market, but it's good enough. So we'll see that it's actually below its high level of 2007 before the recession. Well, let's look at the weekly, because that might tell us something. The weekly shows us this stock may have bottomed, but the only two options looking at the graph alone would be to short it, or seeing as it's weekly within on the year it's up 12.23%, you might want to short it, or you might want to stay away from it altogether. But let's look at the numbers, because the numbers are important. You see it as a PE of 26.97. Now the average PE for a company in the S&P 500 is about 14.6, 14.5, 14. It's in the mid to high 14s. So this clearly stock, and when I say PE, that's price to earnings. It has a low PE EPS this year. Its performance on the month and week seemingly are good, if you can see to the right here, but its performance on the quarter is bad, its performance year to date is bad. But you also have to look at some other factors, like look at the return on investment. That's 7.61%. Now you don't want to go with this stock. This stock would be a short. EPS is just an intrinsic calculation. It's just what's estimated. It's beating the 20-day moving average. It's beating the 50-day moving average, which could be a positive because it's increased quite volatility. And in the future, this may be a good investment. But for now, I would stay away and short on WWE. We'll have a series of these investment tutorials. But that concludes our tutorial. This is my new outlet for my nightly banter. I guess I found a good spot for myself in teaching you guys. So just listen to what I have to say. I'm a seasoned investor. And that's about it. It's TCacciola of Hamilton Financials, Current Century Media, organically ranked, and TCacciola Company. Thank you.